yesterday we took the long from the golden pocket plus the point of control, and we got a pretty nice move to the upside. And then we rejected off that value area high, which was also an old daily level. And this is the 1 hour time frame. That daily level was pretty intense. And then we came back down, and we did get the chickens drinking water from this wick with the 382 confluence. And that also did give us a pretty nice move. Once we closed that candle above the level, we got a pretty decent move. So the scalps have been nice, and we're just kind of ranging here. And we're going to be talking about, well, New York's going to open in about 15 minutes. And, potentially we're forming either a Bart Simpson, where we're just going to dump and fill these single prints, which is actually a very juicy potential trade setup, either where the single prints begin or down here. Or we will break out of this range here. So, Boyan is gonna be talking about some juicy levels, I guess, right, bro? You've got some juicy levels.
Yeah, so first of all, I want to say like these highs I don't like at all. I don't think like they are I don't think the high is in basically. I don't think I mean we can dump from here, gets to the previous range value high that we were in, but I I think that ultimately we will come back up and eventually either SFP these highs or continue to that monthly naked point of control that everyone is looking at, which is at like 49 almost. And the reason I think these highs aren't great is because on exo charts we can see that there is no selling tail. And this template, all of these templates I have loaded here, you can get from the course. And
Yeah,
as you can see here, we don't have a selling tail on these two highs. And also they just look ugly. When you go on a daily chart, these highs, if we like go on a bars, these
hmm,
highs they aren't good at all, right? When you
yeah,
see when what you want to see on a high or a low is like this wick, like this one here, basically taking the previous high, or this here
like
taking the previous high.
an engulfing
Yeah,
candle. Let me
yeah,
come back to my screen here because yours is a little bit difficult to see. I just want to kind of explain um, to everybody what exactly you're talking about. So Boyan's looking at the TPO chart, and in the course we kind of discussed the importance of buying tails and selling tails. And when you have a time profile um, on a TPO chart, when you have rows of single prints at the very high of the profile, that's called a selling tail. So you can see right here for today's TPO chart, when we came up to the high for the day, we have what's called the selling tail, where we have three single prints right here. And this is showing us that there's big players that want to push price back down. And if you ever notice on a TPO chart that you don't have the selling tail at the top, this usually means that there's unfinished business at the top. It means there's a greater probability that we will come back up and come back above this high. And so that's what he's looking at, which is one of the reasons why he doesn't like the highs. And now, bro, I've got your screen back on here. So
yeah. And also I have a short from here, but I already have taken profits, and it's because of this channel I posted a while ago in the Discord. I think when we were here, I had it from like maybe here when you put in this high. So you just connect this high and then this low, and that's what gives this channel.
mm-hmm.
And then you can see we are exactly on top of it here. That's why I entered a short from here somewhere. I don't know the exact price, but it was on this high here. Um, and yeah, now I don't have any channels for this price action. People in the Discord asked me previously, but only thing I can find is like maybe this here. You can see we respected this high here and basically all of these, but nothing too good to trade off of.
That's actually really interesting, that channel. Let me quick draw that on mine because I have I have some interesting levels marked out that potentially the bottom of that channel does it find confluence with where um, those single prints begin by any chance?
If we can dump fast enough, yeah.
Interesting. Maybe I'm drawing it wrong, or
I
no, I might
I
be.
I gave you like if you can see my screen, I show how to draw the first
Oh,
points of it.
okay. You drew it from that wick up to that. Gotcha. Oh yeah, look at that. That actually that could give us a really nice confluence if we come down right to here. And I guess you can't really see my screen, but
Yeah, I'm watching it on the phone.
oh nice. Yeah, so that could be a really interesting potential long right there. Um, so as far as you don't like the high we put in, so you're looking for higher. I'm also looking for higher. I also did take a short, um, just mostly to hedge because I'm in so many
Yeah,
longs. You know.
yeah, exactly. That's why I saw this high that it was a poor high from this here, poor high, but still when it came up here I saw like no volume and then it was like the 886 I think.
Mm-hmm.
Um, yeah, 886, and then I shorted, even though it had like a small invalidation, but it was like a hedge from all of the longs I'm in, and also the spot BTC I have. That's why I'm more aggressive on shorts, and I like to get in more shorts than longs. I don't mind if I miss a long as much as if I miss a short. It's like um, very, I mean, not very bad, but still, I would feel bad.
Yeah, for sure. So right now you're looking to potentially the chickens could drink from about 48,207. We have that high that we put in right
Yeah.
here at 48,207. There's a potential chickens drinking water up here. Now, do you think, because it is so interesting, we have the chickens drinking water at 48.2, but we also have a potential chickens drinking water at 48,539 coming right up to that naked monthly point of control. So if we get a move to the upside and we take out these highs, where is the short in your eyes?
Yeah, so I would monitor order flow here, and if we come up, I mean, I think we will, when we come up here, I wouldn't preset any orders. I would wait to see if there are any longs trapped, and there will probably be like a decrease in open interest from all the stop losses that we've accumulated over this range. Because imagine everyone that shorts here, what's their like, even if they short here, what's their stop loss? It's like, oh, above this high. So if you come up here, I think there will be a decrease in open interest, and we can see it on this template. And then you can zoom in to see if there are any longs trapped, and then you just wait for either a 5 minute or 1 minute, depends on the trade, really. You can wait for a 5 minute close below this level and then short with a very easy invalidation, which is the wick we form. So if the wick comes, so this is the level. if the wick comes like here on this drawing, that's your stop loss, and you trade back into the range. This is why the SFPs are very easy to trade, and also they have very small invalidation. Depends on where you're getting. As I said, I like to be aggressive, but you can even wait to close below, so it would be here. It's still a point 0.3, point 0.4 stop loss in
Very
order
good risk
to,
reward.
yeah, in order to possibly trade it to the low of the range, which is here. Obviously, you have TPs along the way. For example, the VWAP wherever it may come, and also you will have these fib levels, that 382, and probably some other. If we come from here to there, you have this, which will probably be with confluence of the point of control here. Yeah, that's like a take profit, a very easy take profit here.
Yeah. So let me just on my screen so people can see more clearly. Um, just because for some reason yours is very small. I don't know why, but he is looking for us to come and well, I am too. Um, if we come up above this high, like this, what he wants to see on order flow is usually when we're looking to on order flow charts, we usually would want to see an increase in open interest before we get a reversal. But because of the fact that we know that a lot of people are going to get stopped out of shorts if we get another rise, it's okay to see a decrease in open interest here as we're coming up higher. But the main thing that he's looking to see is a whole bunch of longs trapped um, up high, and then if you depending on how aggressive you are, you can enter the trade. So if we see something, I mean, for example, like this candle right here, where we have uh, we would want to see probably more imbalances, but we have a lot of longs here, and then the price immediately comes below. Um, that's kind of something that you would want to see. And I also, for me, you know, I would want to see some bearish divs as well, especially on the 1 minute time frame, preferably on like the 12-minute time frame, which we could really get. We could really get that here. We could see over time. Even now, things are looking like momentum and money flow are coming down as we range here. And so even if we do get one more push up, and we get something like this, or even if that wave comes up higher, right, we could still have bearish divergences from back here, and there would just be a lot of confluences to get into a short if we pump up to that area. So New York is opening right now. Do you want to take a look at the order flow and kind of like walk through what is happening and what if we see
Yeah,
anything?
yeah.
Um,
So right now, we have a lot of shorts coming in on this VWAP. That's defended. You can see we created this bearish divergence, I mean bullish divergence from this low and this low. So, and on CVD you can see that it's going down. Just CVD is like the basically a line of delta. So you can see from it that mostly there are shorts in this price action from like 2 hours ago, and price still hasn't moved below this low. So someone is likely um, accumulating all of these shorts into a limit long position here, and now you can see all of the other market longs came in to basically protect this low, which I traded, and I think I got stopped out. But that's why we take profit here. I said in the Discord that where I took profit, yeah, and it's exactly at daily open. You can see that after that we rejected exactly from there. That, and basically that's why we take. take profit. And yeah, I got stopped out from that one.
So just to walk people through a little bit now, just so everyone knows, actually, all these sessions, me and Boyan are going to be doing this once a week, and we're going to be uploading these sessions to the course, the ExoCharts course, after we do them. And just if anybody hasn't taken that course, what we're talking about here with the CBD is this line here is basically showing us um, who's in control of the markets, the buyers or the sellers, but it's only showing us market orders. It's not showing us limit orders. So with this line comes down, that means there's an increase of people entering market shorts. And so when we see that more and more shorts are opening up, yet we see the price every time it makes a low, it's putting in a higher low. The the reason that's happening is because there's a larger player here who is absorbing all the market shorts. So basically, everybody who's shorting is basically filling the long orders of somebody who is a big player who wants to push the price up. So that's the only explanation. If you see there's a lot more shorts opening up than longs over time, yet the price is getting higher, what's the only explanation? There are larger players in the market with limit orders that are being filled as these people are market shorting. And so when we see that happening, we can expect a move to the upside. So when he's talking about bullish CBD, he means the CBD line right down here is getting lower and the price is getting higher over time. So um, just in case anybody doesn't understand that.
Yeah. And now, everyone, I mean, most people ask me about tick sizes, and it depends really on the price action. Because if we are like not doing anything, like here, you can see these are like blocks, and you can still use 40, but usually when price isn't doing much, I like to go lower to just see where how many orders and where have been placed. But for a big wick, for example, here you can see this is like a perfect tick for this wick here. So it's not there isn't such a thing as one tick fits all. Basically, you have to move to change it where depending on price action. And I think this one is set to 40, and also like time frame. This template is on 15 minutes, but I like to use 5 minutes as well, just to because on the lower time frame it's more accurate, and that's why I like the 5 minutes for the order flow.
So basically, it's not the tick size that matters. It just matters that you know how to use it.
Exactly.
Got you. And so when people are looking for divergences on the order flow chart, are they looking for very local divergences, like from one swing low to the next, or are we looking over time to see what's happening, or both?
So like divergences, if you go on like the 4 hour, you can see this I would never take into consideration when trading because it's just too big of a time frame, and you can see like the tick is 6 here, and I think that's too low. You can go 140 and it's better now. So like divergence on higher time frame doesn't mean anything. You can trade off of that. It's not like market cipher, and I like to look at it on the 15-minute or 30-minute at most, and locally you can go even as low as 1 minute. But if you go on 1 minute, you're much better off of going on TR. This is like
Yeah.
very zoomed in. This is X-ray vision, and you can have if you have multiple screens, you can have order flow on the 5 minute and then the TR on another screen, and then just look at both and then switch between trading view and look at everything.
Yeah, the TR chart we'll have to do a session of just scalping on that cuz man, that thing is so juicy.
Yeah,
You can
yeah,
catch some really nice scalps with that. Some really really nice ones.
yeah. And so just so people know,
Like
the
look at
the
that. Look
TR,
at that.
yeah, the TR on exocharts on the web version has some bugs, and you can see that the candles aren't the same size. You can see this one starts from here, this one has a gap, and you can see this one how big it is. That shouldn't happen. They're all of the TR candles should be the same. And now you can see the decrease in open interest. That means a lot of position got stopped out here below previous day low. And if you start like recording statistics, you can see that a lot of stop losses are placed below the previous day low and previous day high. So a lot of times you see this like wick below previous day low, stop them out. You can see that they are stopped from the decrease in open interest, and then just move back above.
Yeah. So this TR chart is well, we have a whole session on it in the course.
Yeah.
But look at the move we just got to the downside here. We got some bearish CVD, um, and then we got that move to the downside,
And you can
right up above the
also
VWAP.
open, yeah, you can also open net longs, net shorts if you aren't, if you want to see them. You can basically spot them from open interest and delta, but at first you can even open the net longs, net short. This just means new longs and new shorts, and the numbers aren't exact. So this is not like 644K, it's just an estimate. These numbers aren't correct. They're just estimates. But I would say you don't need them. You can there is an OI template with the net longs and shorts, but you don't need them on the TR chart.
Yeah. So the TR chart, the best way to use that is, I mean, honestly, there the easiest way to catch trades on this is if you see, and like Boyan was saying, there's a bug. So if you ever see a purple wick to the downside that's not supposed to be there, you're only supposed to see blue wicks to the downside and purple wicks to the upside. But if you see that we put in one high and then we put in another high, and you can see that the CVD is getting higher over time, that could give you a nice scalp entry. And of course, you have to be quick with the take profits and stuff. But this is like he says, it's like having X-ray vision, because you can see what's happening on like a very small time frame. And really, it's really cool. Like, especially if you're somebody who doesn't have a lot of time to trade and you can only trade for like an hour a day. There have been times where I've gotten like two scalps like in an hour just watching this chart recently. Um, like even
Yeah,
right
so
here, like look at this one right here. Like we put in a lower high, and we see the CVD is getting higher, and then we drop right from there. And what I also like to do, instead of just looking at the line to see if CVD got higher or lower, I like to look at the actual numbers on the chart. But my extra chart is being very slow right now, so but I like to look at the numbers down here to see did it get higher or lower, because this will give you a more accurate.
yeah, and if you want the correct candles on the TR template, you can download the ExoCharts desktop, and there they have fixed their TR templates and their TR charts and candles, and you get the correct numbers all the time. And as Jay said, there shouldn't be a red candle with the wick to the downside,
What's a red
and
candle?
basically this the purple one. You can
Oh,
see the purple one.
okay.
This is a clear bug. Purple one shouldn't have a wick to the downside, and then a blue one shouldn't have a wick to the upside. This is a bug, and let me find. Yeah, this is a bug, for example, as well. This shouldn't happen, and they have fixed this on the desktop version. And if you open it and compare side by side, you can see how much clearer the desktop version is. And for example, for a quick scalp here, this was during the live, I think, but I hadn't opened this chart. You can see that you can't notice this on the 5 minutes, say. You can see that we have a bearish divergence here, But if you go on a very low time frame, you can see here that we have a high and then a lower high, but CVD is going higher, and you can read the numbers here as well. So minus 63 million, and here we had 65, so that's 2 million absorbed. That's what basically CVD is. 2 million absorbed, and then that's a really easy scalp you can take and take it below previous day low. And for these previous day low and previous day high, if you trade them, I would suggest don't look at them as an exact level, but if it's a previous day low, always look a bit below it. As I said, they like to take out the stop losses there, and if it's a previous day high, obviously you would look above it, a bit above it to take that high, to take the stop losses and the previous day high.
You
I
know,
wouldn't trade. Excuse me?
I'm sorry, go on.
Yeah, I said I wouldn't trade the exact level here as I would, for example, daily open. You can see daily open here acted as a resistance pretty much to the dollar.
Now, it looks like right there we got a bullish divergence on that low underneath the previous day low. The CBD came down,
Here?
price got higher,
Yeah,
and now we
yeah,
came up a little bit from there.
yeah.
So
It's
this
yeah, it's
this
simple as that. You can see how you could have had two scalps in a matter of 10 minutes, and both of them are profitable. And also take profit on these scalps. I like to take them very fast, and I like to close the positions on the scalps, and that's why I use Atis when trading the TR. You can trade from Atis and have multiple accounts trading from one button. And for example, you can enter a day trade and a scalp from here, close the scalp here, and leave the day trade running. If we, for example, go to the previous day high or move to the golden pocket,
Yeah,
for
and
example, here.
something else I do want to point out too. Like when we're using the TR chart, I found that like the best. Oh man, I hate when people call me when I'm on a live stream. Hang on. Sorry about that, guys. So like we could see that basically for the long trade that we could have gotten on the TR chart, we saw pretty clearly that as we were putting in this right down here, a higher low, right, from down here about 46.9 and then 46,920. The CBD was getting lower. This is showing us, short trades are getting absorbed by longs. When we come over to market cipher B on the 1 minute, we also see bullish div. People, big Ben on the 1 minute, bullish divergence. This is like extra confluence for like taking those scalps. At least for me, like when I see the market cipher and the TR chart lineup on the low time frames, that's always like a really good move for me, as opposed to like if I only see one or the other. But you really do have to take profit quick, like for if you're going to be scalping on that, because if you don't take profit really quick, you're probably going to end up in a loss. So like you have to, like for me, like I limit. You have to mark it in, but then you like have to limit out quick, like half your trade.
Yeah, this is for scalpers that are in and out of a trade very quick. You can go in and get out in a matter of minutes, like two or
Yeah,
3 minutes,
this is
five
not for
max.
schlonging.
Yeah, yeah. This is
This is
very
for like,
fast,
yeah, this is like
fast-paced trading.
you come for your money and then get the heck out.
Exactly. You just and that's this is a way to extract money from the market, very quick, very easy, and you just go in, go out, go in, go out, and no, you shouldn't have any greed to let trades run. Or I mean, there obviously are situations where you can do that, but you shouldn't you shouldn't do that on every trade. You should have your take profits, and then if you hit take profit one, stop loss to entry, and then on to the next trade.
Yeah, yeah, for sure. Yeah, I've made some pretty good trades doing that. Um, it's actually pretty lucrative if you control your greed and just get in and out, and what I found that works best for me is to take 75% out at TP1, limit stop loss to entry, and then if we just keep going, then hey, we keep going. You can get some more from it, and still look for other trades. But
Yeah, and now with Bybit's new fee structure, the market fees are even cheaper. And
yeah,
if you have enough trading volume or capital in the accounts, you can get down that market fee even lower, and which is great for these kind of trades.
so what do you think, man? Like New York opened, we're under the VWAP. Um, we came below VWAP,
Um,
retest, backtest, rejected it as resistance. I mean, there's a good chance we could come down lower from here. You know, we look at the 1 hour time frame, even like money flows coming down. I would love to, honestly, I would really, really love to come down and bounce off those single prints. I mean, that would be so juicy. I feel like a lot of people would get trapped in shorts if we came down and we started like dumping down through here. Um, this could be a really good support. Or if we fill those single prints, people will be like, "That's it," we're going back down to Sheol to Hades.
Yeah, and that's like what single prints usually do. They trap either type of trades, either longs or shorts. If you have a single print and if it gets filled, usually the fill part is with trap traders. If you see a filled single print and if you zoom into it, there are probably trap traders in there, and that's like what single pairs are best for. And also on trades like these, I also like to look at liquidations. So these bubbles here, those are great to look at, and they can give you confirmations. If a big long is liquidated, for example, here, that's added confidence to my short that I took here. When you see this, that's like um, some big
Yeah.
position got liquidated, and you go opposite of it.
So just so everyone's aware, like that to see that on your chart, you click this thing called rect up at the top,
Yeah.
and this will give bubbles when people are getting liquidated long or short. And the blue ones mean longs are getting liquid. I'm sorry, the blue ones mean shorts are getting liquidated, and the purple ones mean longs are getting liquidated. It's kind of the opposite of what you would think sometimes because of the colors. But if you could see, like as Boyan was saying, like if we go down to a lower time frame, if you see that like a lot of people are getting liquidated, that can give you confirmation that we're going to go back in the other direction. If you see big dots, which man, my Excel chart is very hard to use, so I'm not even going to try and use it. But yeah,
Yeah, and also the bigger the bubble, for example, this one here, the bigger the liquidation. And on the ExoCharts desktop, they even have numbers for how big the liquidation is. For example, 2 million, 1 million, or let's say 500K. You can see that, you can enable that on the desktop version.
so what's happening right
And
now, man? Because right now we're like flirting with that VWAP.
yeah, if you longed this, as I said, the previous day low gets taken out, and then you can see the positions getting stopped out there with this big decrease in open interest. Um, and it has like 11, then 1.6 volume. That means like 12 million positions. There is a total of 12 million. We don't know how many got stopped out, but this when you see this big of a number, that's added confidence as well. And you can see we go down, go below the VWAP, below the previous day low, take the stop losses, and then never go back below this low. So that's how you know this move was to get the stop losses. And then we have then we as I said, we never take this low, and then you can open your net longs and see net longs increasing here. If we zoom in, you can see the delta. So 1.5 million, that's a good number. These are all small numbers, but still good enough to get your first take profit at the VWAP. And now you should have moved stop loss to entry, and it's a free trade. Whatever it does, you won this trade,
Yeah.
so it doesn't matter.
So I wish we had caught these moves on the stream because we had a short and a long um, on this TR chart right here while we were flapping our lips. But
Yeah, but you can see the volume isn't that great. And we don't have a bearish CVD, but when CVD is like not a par with price, that means it's like a lack of participation. And basically, when you see lack of participation, it's not enough volume, that's all. And when we don't have enough volume at resistance, which is VWAP, we tend to get a move down
yeah,
and reject from it.
that's
But
another
any
good point you make. So just so everyone knows like what he's saying, to put it into high school dropout terms, because I myself being a high school dropout, the when we're coming up to a resistance and you see something that looks like a it looks like a regular divergence that you would see on the RSI, where price is getting higher, but the CVD is getting lower. It looks like a regular divergence, but that's lack of participation. It's basically just saying that even though price is coming up, there's no real volume behind that move, because you have to think about it as if price is getting higher, if it's going to be a healthy move, it would be supported by new longs entering into the market. And so we can see on this CVD line, are there new longs entering into the market as price is getting higher? No, there's actually not. There's not any new longs entering in. We can see open interest is actually getting lower, so there's trades closing out. And so basically you can think of it as there's not enough gas in that rocket ship to get us through the Van Allen radiation belts to the moon. Um, and it looks like a regular divergence. So when I'm looking at CVD, the best way to think of it, especially if you're new to all this, is you're looking for hidden divergences, like right here. This, if we saw this on Market Cipher where price is making a higher low and the oscillator is making a lower low. I know this is not an oscillator, but I'm putting into RSI terminology. You would call this a hidden bullish divergence, but on CVD, that's just a regular absorption CVD divergence. And then if you see what looks like a regular divergence where price is getting higher, but momentum, not momentum, but CVD is getting lower, this is simply just telling us there's no actual traders coming into the market to support this move to the upside. So if we are coming to an area of resistance, then you can look for a rejection from that. But the absorption divergences are much more powerful. So if you see that there is price is getting a higher low, but CVD is getting the lower low, this is telling you that there's active participation in the market by people trying to short price and other people, larger players, putting in limit longs to try and get the price higher. So this is a better trade to take, but this is still a good one to take because you can say, okay, we don't have enough gas in the car to get us through here. We don't have enough traders in the market. There's a lack of participation. So because we're coming up to an area of resistance, it might be worth a short trade, especially since it's a very good risk to reward ratio, right? How much do you have to risk here? It's like 47 112 up to 47 140. So we're talking like a $35 stop loss. I mean, that's nothing. And we know potentially we could get a significant move to the downside here, which we are getting right now, right? This would not be a bad scalp, especially if we TP early. So, and now we can see just locally, as after we didn't have enough gas in the car to get above the VWAP, when we start coming down, we can actually see that the open interest is increasing a little bit. We can also see that shorts are actually stepping in, which is why we're continuing to get that move to the downside.
Yeah, and we're still in a, a low volume environment, I would say, because this is not this is not a lot of volume when you take into perspective what BTC can do and what it did in previous days. For example, this week here had 176 million, and now we're trading at like not even 30 million here. You see 29 million and now 5, 6, 4. So this is a low volume for now.
Right. Yeah, which is weird for New York Open. Guys, I kid you not, every single time me and Boyan hop in a call together, there's crazy volume, crazy volatility. We always get into a trade, always. And now that we're doing it live, it's the opposite. So that's just how life
Yeah,
works. But one thing I would say also, because Boyan brings up a really good point, is when we're looking at the order flow, if we want to see trap traders, the higher the volume, the better. So when we're looking down here at our footprint bar statistics, if we're looking to like get into a long or get into a short, we want to see like abnormally high volume, like down here. You know, when we got the chickens drinking water down here, look at this 1 15-minute candle is 187 million volume compared to all these other candles where we have like 6 million, 12 million, 7 million, and then all of a sudden almost 200 million. And we can see here that most of those shorts are in the wick of the candle right here. And when you see abnormally high volume with negative delta, this is showing us that there's 88 million more shorts than there are longs. Then we know 88 million shorts are going to be trapped here if the price gets higher. And something else I should point out, even on the 15-minute time frame, we can see that after this second 15-minute candle forms, and this is taking half an hour to happen, right? So although this is taking half an hour, we had a long time to actually get into this trade here, depending on how aggressive you want to be. You could have even waited until the close of this 15-minute candle to have confirmed that although price came higher here on this 15-minute candle, CBD actually got lower, right? It went from negative 74 million and then it went down by 2 million to negative 76 million. And we can see this line also getting lower as the price comes higher. This would be the perfect long trade to enter because there's 88 million trap shorts here. We can tell that all these shorts have filled long orders that were limit longs because the CBD has gotten lower, showing us that although more people are trying to market short this, price gets higher. What's the only explanation for that? Large players with limit longs being filled by all these people shorting. And then you know, you could have even waited more, but at this candle close, I definitely would have entered that trade right there, um, for sure, because that would have been confirmation enough. And if you go down to a lower time frame, like the 5 minute, you can see with more clarity what's happening down here. So, where was that? That was back quite a ways now. Of course, I slept through it. I actually didn't take that trade, even though I was planning for it yesterday. I'm in a point in my life where I'm not gonna kill myself to catch every trade, guys, because I'm pretty sure I aged like 20 years in the past 3 years trying to do that. So, but look at this on the 5 minute time frame. You can even see much more clearly here that on this 5 minute candle, we have that same almost 200 million volume on 5 minutes, and then immediately after, price is making higher high. I'm sorry, it's making a higher low on this wick. CBD is getting lower, and then boom. From there, all these shorts are trapped, and we move up from there. And if we take a look at Market Cipher during this time, which was about wait a second. Oh yeah. So it was yesterday. Yesterday at 21 o'clock. Oh yeah, here, right here. So we can't really see on the 12-minute time frame that we're getting a bullish divergence. Now we were looking to trade this as a potential chickens drinking water, but what we do see on the 12-minute time frame is we do see a BitBoy green dot. So this is just added confirmation. And if we go down to the even 1 minute time frame here, then we can see as we are coming down to this area, and this is like the main indication I use to trade chickens drinking waters. I look at the money flow on the 1 minute time frame. If the money flow on the 1 minute time frame is making a higher high as the price is doing that, this is like super confirmation. So like every single thing on this trade is telling us to long it because money flow is getting higher. Um, Even though we have this lower momentum wave, I on the 1 minute, this is still considered to me bullish divergence when we have the momentum waves getting higher. This last one doesn't ever count for me on the 1 minute, but that's like a perfect kind of setup. In fact, I was kind of hoping we get something like that for New York Open, but yeah, we don't have it.
Yeah, so now I think if we go below the previous yellow, I don't think there's much support um on like this whole move down. We haven't built much support there because it's basically a wick. If you go on the 1 minute, I wasn't awake this time either. I mean, it's not a like a liquidation cascade, but we have spent some minutes in there, 22 minutes. But still, I don't think this will offer much support. We can see the volume that has been traded there from this here. So we can see here it had most volume 46,725 because of the uptick. You can see that here, and also it's a buying tail, so I think lose this level here, and probabilities are we will go below this low, which is 46,375 approximately. And a trade I was looking at for for below this low is to take maybe stop losses that have accumulated here and below this low. So everyone imagine if everyone that long this in those 22 minutes had their stop losses here below the low as you do, and then probably there are some stop losses here as well, but this is not a swing failure pattern, a usual swing failure pattern. This is just like a possible one. The probabilities are um it's not going to play out, but I still like to have it in situations like this. Basically, look at it. I would never set set a limit order there, but if you are in front of a computer and you set your alert here, and then it goes off, and then you just jump into the order flow, see if there are any positions trapped and how many got closed, and if you like the numbers, if you like the volume, if you see a lot of liquidations, then it's a very easy trade. As I said, swing failure patterns are just um, stop loss above or below, in this case below the wick we form, and then you go on from there. Um, Also, I think there was a single print right here on a very low time frame on Atos. I found it, but
Oh,
on exit
nice.
charts I couldn't found it. I couldn't find it here. It doesn't show, but it's basically here. It ends at approximately 46,200. And when you have like this swing failure pattern into a single print, that's a very good trade. But as I said, this is not a usual or an ordinary swing failure pattern. I like the ones that are, for example, this one here I posted in the group as well. We traded and then we hit take profit one at the golden pocket here, and then price dumped down again. That's why it's important to have good take profits, because everyone can basically press buy or sell, but where you take profit is also important, because that's how you secure your payday.
Yeah, for sure. For sure. So it looks like we're coming down, man. We're coming down.
Yeah,
Um,
we're feeling that buying tail.
yeah. Interesting, bro. Super interesting. It's kind of a bummer because we could have gotten some nice we could have gotten some nice trades during this stream on the TR chart, but at least we discussed some strategies for getting into trades using the TR chart, um, and even just using the order flow chart as well. So if we do continue to the downside, for me, I'm pretty much looking to either. Well, obviously we could get the chickens drinking water like Boyan's talking about, but I think some juicier levels for me would definitely be like around 40.6, give or take. Um, we have the golden pocket, we have the row single prints, and we have this key support resistance flip here as well. So right at 45.848, if we go to a higher term time frame here, we can see that this is actually the exact high that we put in of the previous range before breaking out. So that's a pretty significant support resistance flip. It's also that level has been our support, numerous times, going all the way back to like December 4th, which is my sister's birthday. Happy birthday, by the way, to my sister. Back then, support once, twice, three, four, five, and then it's acting as resistance. So what a great retest that would be to come down and bounce off that golden pocket. Plus, we have those single prints that begin right there. So that would be from a few days ago now, I guess. We've got these. Here's the poor high with no selling tail, and then that would be coming down right basically to these single prints right down here. That would be pretty juicy. Or if we fill those single prints, we also do have the value area high of the previous range right where we fill those single prints, and we have a naked daily point of control. So we have a lot of confluences at this level right here at 45.8 to 46K, and then a lot of confluence down here at like 44.8 to 45K. So I'm kind of thinking we could do that. The 4-hour time frame market cipher B money flows coming down. It would be really nice. It would be really nice to come down low and get like one of those tight 4-hour dots right here. That would be nice because those tend to give us those ones that are tight against the zero line or even just a little bit below those trigger waves. They give us some pretty intense moves to the upside. Like this one here gave us a big pump. When that money flow is getting thick, they tend to give us bigger pumps. So, what are you thinking, man? Like, you don't like that high, but right now, what do you think is more probable? The daily time frame is giving us a red dot. So I
Yeah,
honestly I'm leaning more bearish right now.
yeah, we can get a move to the downside. I am not saying we can't, even though the highs are poor, and I don't like them. We can still go down, but eventually and ultimately, I think we will go up and either take them, create an SFP them, and create a selling tail, or move to that further SFP with the naked monthly point of control. And also the levels to downside, this swing failure pattern, and then also the trade setups you gave. And if we lose like this chunk of price action, I think it will be looking very bearish in my opinion, because we attempted to break out and then we created like this Bart Simpson, as everyone wants to call it, and then we dumped down. So it won't look bullish at all. So if we get here, I know there is two daily naked point of controls and then some other things that line up. I don't quite remember. But still, this is also, yeah, the value high of this whole range is here. So lose that. I think we can go to the point of control. Let me just draw that for you. Yeah, so value high, as you can see, it's here. So lose that, and then we can go to the point of control. And then if you like zoom out, this is like attempted breakout, but it it didn't happen. and
Yeah, fake
yeah,
out.
we can move. Yeah, we can move to the point of control eventually to these lows that are quite close to each other.
Yeah.
And
Back
also
down to the
something yeah,
back down into the range to the low of the range.
yeah, the load range, and then probably the value areas will shift, and this will become the point of control here, and then this will be resistance because you can see this is a high volume node here and here, so this will probably become the point of control, and then if we lose that, if we swing failure pattern these lows, this then will be a resistance, a very big one, because it will be the point of control
Yeah,
of
that was a massive level.
yeah, it will be a point of control of almost 80 days. Yeah, 80 days worth of price action. So that will be a very strong resistance. But we're talking days in advance, and I don't know if we even get to this here if we lose that very high. And also something I want to point out: the channel I drew at the beginning of the stream acted as support right here.
Hmm.
You can see that.
Look at that, man.
Very nice.
Nice, bro. Yeah, so I guess for me, I'm just kind of waiting it out to see if we come up higher or come lower. I'm kind of just kind of schlonging it right now. I like I said, I entered a short, more of like a hedge position. I think I entered it pretty high, like around 47.8. I think it was pretty high. I just entered it and said, well, you know, if it gets stopped out, it gets stopped out. I'll look for higher. Um,
Yeah,
but
it's
I'm
still a
in
good
I'm in so
short.
many longs. It's like if I don't have a short, at least a hedge, it would be irresponsible.
Yeah, yeah, and also the spot Bitcoin, you have to take that into consideration
Yeah.
when
Yep.
trading, because if you're trading like bigger sizes, then bigger positions, then it matters actually, the hedging part, and knowing how to trade with your spot positions is very important when you get to that high level of trading with big positions.
Yeah, for sure. Yeah, it could be even just 1x leverage. Um, just because if your spot Bitcoin value is going down, you can hedge against it. USDT. Wow, look at that. Bounce right off the golden pocket, middle of the channel.
Yeah,
So
yeah,
I wonder what order flow was doing when we got that.
yeah. We weren't looking for that.
Crap, bro. Oh man. Oh man. Let's go down to the 5 minute and see if we had anything.
Um,
We had
yeah.
we did
So
have
you can
some
see.
some bullish CVD, and we did have a little spike in volume with some trap shorts. Um, we go to the TR template. Let's see what we had here. TR template. Um, actually, I don't really see anything too much here that would have gotten me in. But what do you see, bro?
So everyone that the thing we talked about, you can long this, then set your stop loss below the low. Um, Everyone that did that got stopped out here, and you can see that with the decrease in open interest. So
Mm.
here, 16 million, 6.8, and that means that um, 7 million positions got almost 7 million. We can't know the exact number because it's the difference between longs and shorts, but around 7 million got stopped out here. So everyone that longed the previous day low, the trade setup we were looking at, and they didn't hit take profit here, and they still had their stop loss here. They got stopped out with this wick, and um, you can see the number of, and if you can see the number of
longs.
positions here.
Yeah.
Yeah, and also if we enable net longs, it's probably a decrease. You can see this is a decrease in net longs, and shorts aren't doing much here either. Yeah, they aren't doing much. So you can see that you don't need net longs, net shorts. You can tell from the open interest and the delta. So open interest negative and then delta negative, that means longs
Longs getting
closing.
stopped. Yeah. So if you see open interest decreasing a lot, and it like on the footprint bar statistics, it looks like that you have a lot of, like, you would look at this and say, oh, there's a lot of shorts opening up, but because open interest is coming down, that means trades are closing, so we can know these are actually longs closing, getting stopped out here. So that's something else to take into account if you're looking for trap traders. It's actually best if you see open interest increasing, when you see the high negative delta and the high volume, because that means there's new traders opening up to get trapped. If there's no new traders opening up to get trapped and it's simply just longs getting stopped out, then there's nothing really to get trapped down there. So um, that's just something to keep in mind. But obviously here we did get a move to the upside, but we have generally low volume and stuff. But if we're looking to identify trapped traders specifically, you want to see that increase in open interest, because that's how you know there's actually traders there to get trapped in the first place.
Yeah, and also it was the weekly open there. And given everything into context, that's how you build a trade setup. So everyone that longed here didn't hit their take profit, didn't change their stop loss, got stopped out. And then if you had that in mind and then had the golden pocket here or this channel, you could have waited for a move down. Or if you longed the previous day low, you hit take profit, get stopped at the entry, and then wait for a move down, which is the weekly open, then golden pocket, and then this channel, and that's a nice trade. That can be a day trade actually. This one here, this is not a scalp. I would close right away from like the regular scalps. This one could have some potential to be a day trade and traded basically to either the top of this channel here or the top of the range, which is the value area high if we pull this volume here. Yeah, the point of control, excuse me. So this is a nice TP, and then eventually the value area high here, and then you can have levels in between um, if you go on the order flow template, you can see daily open, per day equilibrium, but we already rejected so many times from here. Um, I would expect to push above it, so I wouldn't take profit at them. I would, yeah, but they basically match this. Yeah, so this is added confluence here, but yeah, this is like take profit one. I wouldn't close it, and then take profit two would be the value area high. Eventually looking to trade it to this here, to the swing failure pattern we were looking at. And yeah, that's how you go with the trade setups or the price action you are given with. That's how you create a plan and stick to it. And
Nice.
also, if you think like this is scalping doesn't have potential, you can take profit here at the VWAP. We are still at resistance, and this still could head down. We can know for certain that it will come up here or here.
So
So yeah.
John J in the chat, he wants to know if you can explain how you pull your channels. Um, how do you pull your channel?
So
You just look for a channel, right?
um, my channels are mm, how can I explain this? I said in the group this morning that if they wanted, I could create like a lesson on how I pull my channels. But like a brief overview is I want to connect two lows or two highs, and then usually a third point is in between them. But now you can see that, for example, this channel, the third low is here, the third high, excuse me. So you have this, and then this low, 1, 2, and then the third high is here. But usually it's in between those, so it's usually in between those lows. But it's very context dependent, and for example on this one here you can see it's much more respected, and that's why I had this one on and not the highs in the middle. It's like experience, and also you have to look at it multiple times to get a clear picture of what I'm looking at. And for example, this one, you pull it here and then the low in between them, which is here. And then I had it when we were here. I posted it when we bounced off of it, and then it got respected here as well. So that's how I look at channels. And you have these on like the 30 minute and the 15 minute, multiple times a day. I mean multiple times a week, not a day. And I have posted a lot of channels in the Discord. You can go back and see how I pull them and get a gauge. So here I would pull like this, but you can see that the top of the line is respected, but the bottom not so much. So you can still have this channel, but it will be as a support if we come back here. Yeah. And also if I go back, for example, I would find multiple ones on the 5 minute, but I will leave that for the lesson if I do it.
Nice, man. Thank you for that. So, yeah, so John Jay would love that lesson. Um, Gretch Paving says, "Hey guys, I've had great gains lately, but fell foul to the sideways movement. How can I prepare myself for sideways trading?" Honestly, you should always be looking for sideways trading. You should be looking for ranges, whether they be on high time frames or low time frames. You should be looking for channels always. So, like for example, regardless what's happening, um, like all this kind of price action we've been looking at here for the past few months, literally it's been sideways action. We have a high, we have a low, we have a high, we have a low, we have a high, we have a low, just trading sideways, and then we just break out. um, you know Once we break out, if we come to the 6 minute time frame and we just zoom out, I mean, we could look at this the exact same way, just on a smaller time frame, where we have the low and then we have the high. This daily was our high for many times. We should just be identifying highs and lows in the market and then looking to short the highs and long the lows. um, it's actually, when you have a sideways market, it actually makes trading easier, because then you have clearly defined levels uh, to look for trades, right? So, for example, yesterday I took a scalp from here. The reason I took a scalp from here is because it was a low, right? We have this sideways market. We know that this was a golden pocket. We know it was the value area low. We know it was a point of control. We bounced from it. I was looking for a long from here. Why? Because we had a clearly defined low with some liquidity that could be grabbed. Um, so it's like the that's how you're going to trade sideways markets, and then you're just going to use confirmations as well, right? So when we came down here, we got bullish divergences on these time frames. As we came down to our level, boom, you take the long trade. um, you know when we come up here as well to this first high, not that we would have known actually this was a high at the time, so that's irrelevant. But if you have a level, whether it be a high or a low, and you have a confirmation that you're looking for, that is how you're going to trade the sideways markets. If you're not a scalper or a day trader, then don't even worry about these types of things, and be looking for the higher time frame, um, levels, right? I mean, to be honest, like when we're coming back to these higher time frames, um, we really, the way I like to identify high and low is using, like, obviously levels, daily, weekly, golden pockets, but volume is really the best way to do that. So, if you're identifying any kind of range, like this one, for example, and notice too that there's ranges within ranges, right? So we traded this range, and then we traded this range sideways, and then we trade this range sideways, and you'll notice most of the time the market's trading sideways. Most of the time, the market's simply just in a sideways range. And then it's a rare anomaly when we get a very strong trend. Even in the midst of strong trends, you'll notice that most of the time we are trading sideways. If you miss the pump or the dump, then you're going to be sitting there getting sliced up in the sideways range. So what we can do is we can pull volume through the range. And here, actually, let me even zoom in for us on this range that we traded here, okay? We pull the volume through the range, and we can identify highs and lows based on where things are overbought and oversold. So if we come above the value area high, we can look for a short, right? If we come below the value area low, we can look for a long. And what we want to do is we want to line up the price action with the indicator. So when market cipher B is showing me oversold, meaning it's come below the negative 60 line, and we're also oversold, come outside the value area low, look for the long trade. When market cipher B is overbought above that 60 line, and same with the price action, look for the short. And then when we come back down, look at this, market cipher B oversold, the price also oversold, look for a long. That's how you're going to do those sideways ranges. And you can do this on as small time frame as you want. So like if we come even to again, like we can go to the 6-minute time frame and just look at the price action that we traded over the past few days. If we're just going to pull a range here, let's say, actually let me come back to where it should be. The way you're going to identify these ranges is usually after the impulse happens, after that first initial shocker, right? Then you're gonna pull the volume from after that first pump. And we can see here also, like whenever we come above that value area high, and also even just on the 6-minute time frame, market cipher is overbought, we can look for the short, right? So let's say that happens here, right, for the first time after putting in this initial high, and we come back down, we look for support on the point of control, and then we look for support again at the value area low, where we come down, right, and then we get a bounce up to the point of control, we come down again, we get the bullish divergence, we come up again to the point of control. We're just looking for highs and lows. That's the best way, honestly, to trade sideways, or honestly any market, because even if you're just looking for these sideways ranges and you're looking for shorts at the top and longs at the lows, eventually one of these times you're gonna long the bottom and it's gonna be this massive move. You know, that's how I and Boyan shorted the exact top of Bitcoin at like 69 point whatever. He didn't know at the time it was going to be the top, but it was, right? You still have that trade open, right?
Yeah, I I have it still open, and I haven't hit take profits, which I have lower. So
Yeah. So for me
I
too,
would,
like I
yeah,
longed from 33.1. I still have that open too. I had no idea that when I took a long from here, it was going to be the bottom, but it was. So like if you're just looking for sideways ranges, eventually you're going to get a whole bunch of small wins. Maybe you'll get some small losses, some break evens, but then eventually you're going to get these massive runners, and that's actually, those are the trades where you're going to make the real paper money, in my experience. What do you think, Boyan?
yeah, I agree with everything that you said, and also um, we can identify which like trade is a scalp and which trade can turn into a day trade or potential swing trade, and that's why it's important to know in what kind of trade setup you are, not to take profit very fast. For example, the trade we had, this one here, we knew it was a scalp that we hit take profit on the VWAP, but now after this flush here, we know that there is a potential to trade this even further upside to the point of control of the range, and it can turn into a day trade. Um, that's how you can be smart with your take profits, and not like take profit 50% here and then you wouldn't have profit for the point of control that's around the daily open. And also to the person that asked how to trade these sideways markets, you don't have to like overcomplicate it, and you don't have to search for these amazing channels. You can just pull your fixed range tool, and then as Jay said, you short the value area high, you long the value area low, and this has, if you did this, it already provided you with a bunch of trades, and it's very simple, and it's a nice way to look at ranges. You don't have to put a channel on it or anything. You can just pull this fixed range and trade the value high, value low. I wouldn't suggest to trade a point of control, because the point of control usually means that um, there are a lot of trades there, so a lot of traders, and it's like a crowded place. And I don't like to trade at crowded places. I like to look for setups that not many people see, and that's why I usually take profit at point of control, but I don't trade at it because a lot of traders are in there. And you can see you can't trade this. So this here, it's, you will get chopped up. You will long here, then get stopped out, then short here, you will get stopped out, you will close your position. So this is not very tradable unless you have like a few levels in there, and then with the TR you can scalp them. But still, it's $300 range that we were in for 10 hours, 11 hours. So I would honestly just go and trade on alt, because altcoins are now mm, doing hundreds of percentages. When you see Bitcoin doing this, it's like no point in trading this. You can't get much of it. You will just lose money on market fees and getting stopped out. That's
Cool.
my 2 cents.
Thank you for your two satoshis there. And yeah, so I think guys, we're gonna wrap it up. It's been a good one. We plan to do this every Wednesday for New York Open, unless otherwise something comes up. The usually Wednesday New York Opens are very volatile, so it's been a weird one. But yeah, do you have any last words to the fine ladies and gentlemen, Boyan, before we peace out?
Um, I would say trade the range until it breaks, and watch for the levels I give in the chat.
Well,
That's
there
all
you
I'm
have
gonna
it.
say.
There you have it. Well, everybody, God bless everybody. Appreciate everyone for being here. Appreciate everybody for being a part of the community. Appreciate you, Boyan, for coming on here and helping people learn how to be more profitable in their trades. And yeah, I'll see everybody in the next stream. So peace, y'all.